Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get right into the mix today. What we're seeing is a market that is trading slightly higher. It is Friday, so generally you expect a slightly higher market on Friday. Why is that? Well, because basically what we have is volume dying out by really around 10:30, 11 on Friday. I stop trading. My chat room closes. Most regular profitable traders know that Friday afternoons the markets are just going to float, and even on Wall Street people take off early. So once you subtract any volume from the market just generally floats neutral to higher, and that's really what we're seeing today. And again, the market's on the SPY up 51 cents on the day. So again, SPY mirrors the S&P 500. S&P 500 itself is up 5.5 points at 1,500 on the day. Dow is up 51 points, and the Nasdaq is up 12. Now the key here is also to recognize the 1,500 level. Usually into weekends, the market likes to close at key levels. So usually 1500 is obviously a major level for the S&P. So usually you'll see the market try to close at 1500 or above for today on Friday. And I anticipate it actually will. My guess is it closes just above 1500. Then the media can pump it all weekend long, get consumers out spending, and then the cycle just begins next week as the markets try to figure out are they going to go up or down. Based off what I have, we are at resistance right now. The 150 level on the spiders. Yesterday we hammered into it, pulled back sharply. Today in the morning we hit it, pulled back, again hit it right here, pulled back. Again, this is currently short-term resistance. We'll see if the markets do pull back for excess of multiple days off of this level or just go sideways. In this upper range, above 150, stretching to about 152 on the spiders, on the S&P essentially to that 1520 level, I am seeing major resistance up in this range. So the markets, if you look at the daily chart right here, major resistance up in this range. Again, the 150 level on the spiders right here, that is big resistance. Also, look at the extended move on the markets. You've only had 2 red candles so far in 2013. That is very, very rare. Markets short-term are extended, absolutely. All right, so again, continuing to hammer on the 150 level, and again, expect the market to start to hit into a little bit of resistance. Up until now, I've been saying straight up markets, floating higher, light volume, and that's been exactly what has happened perfectly. Perfect call there as we continue to move up. We hit the 150 level. That's what I said 2 weeks ago we would go to, and at that point, the markets have stalled out thus far. And again, from here to about 152, major resistance, folks. Major resistance on the SPY. And again, I wouldn't be surprised if I don't think we'll see a ton of a pullback, not a huge pullback, but I do anticipate, choppier markets now, a little bit of weakness creeping in, a little bit of a retrace, maybe back down to the 148 level right here. And again, this is a confirmed level above, so you'd anticipate a little bit of a pullback, all right? You also have a pseudo topping tail here. Not a great one, but a little bit of a topping tail yesterday, which is still valid since you have not closed above the high of the tail. Should we close above the highs from yesterday, that would be negated, and you'd have to start looking for another signal. All right, bottom line is, the key here is the PPT strategies, proprietary trading strategies, investing strategies that'll utilize your abilities, will teach you your abilities, will teach you all this type of thing, giving you that 80 to 90% success rate on trade alerts. And again, you'll be picking your own trades. I do them myself and give them to our members here at the Research Center, but you can easily find out how to do it. We'll teach you how to do it and start doing it for yourself. Again, no hedge funds are doing this type of thing, folks. This is amazing. Awesome stuff. All right? What else do we have here? Google trading up flat to positive on the day. Baidu's up $1.37. Apple taking another hit. Not surprising, guys. I've been saying that the next target on Apple is 420. That's where it's headed. You'd have to be insane to buy it yesterday. First of all, the In the Money Stocks proprietary technique says the 3-day rule, you must wait 3 days, and that's because you'll see margin calls, you'll see a lot of funds unloading and so forth, and that's why it usually falls for at least 3 days. I think it still has another $20 down to go. About 20, maybe about 15 to 20 at this stage as it's trading around the 439, 440 level. And again, really what you're looking for on Apple here, to see right here, see this gap fill right here? That's your level right there. So again, draw a line straight across. That's your target. That would be a great area. That's really where you can see you were hammering here. See this line right here? Okay. So see this pivot top, and you were gap fill, gap up and run. So this is what's called the scene of a crime. So this is where you began a breakout. So removing lower into that level would give you a great, and I repeat, a great entry on Apple for a pop back up. All right. Now again, we'll focus on that as it gets closer and see if it does come into play. Apple's getting a little bit of a bid, which should help the markets here. It has bounced about $3 off the lows at this point in time. Very small bounce, but nonetheless enough to give the markets a little bit of an uptick here. Amazon continues to rally higher, folks. This looks like it's heading for $300. Maybe by earnings next week, it'll be at 300. Hard to imagine it could go that much higher on earnings. Again, the PE just continues to get stretched more and more as this stock gets more and more extended. But nonetheless, it keeps going, and you got to respect that. I would say around the 300 level, that's where you're going to start to meet resistance or into earnings. Earnings, again, I believe, next Thursday, I believe, but don't quote me on that as I'm not 100% sure. I'll have to look at my notes again. JPM is up 57 cents. You want to know a good level on JPM? Very clearly, folks, a good level on JPM. You need to go all the way back here to 2011. The highs from 2011, draw that across. That's where JP Morgan's most likely headed. Chevron, good level on Chevron. You have a great gap fill coming into play here on Chevron right here. And most likely Chevron will head there, maybe even up to here, although the gap fill is really the key level that you're looking for in terms of resistance. All right, taking a look at 3M. 3M is above $100. Look at this. Not one red candle in all of 2013 so far. That's amazing to me. That is absolutely amazing to me. It is extended. It will pull back soon. The question is where. I will be calculating the master level for my members here at InTheMoneyStocks.com this weekend and putting that out as an alert for next week. So again, there's some good trade setups here next week. And again, I've been holding back on really shorting the market because I expected it to go to 150. Now I'm going to start to dip my toe in a little bit on some of these stocks that are ridiculously extended. Again, smaller positions, but kind of spread my money around a little bit and start to look for some good ones. All right. So the key is where's the level? Where's the PPT strategy telling me that that top will be? When we find that, we will play it and make money on it. Come to InTheMoneyStocks.com. Take the 7-day free trial. Again, 7-day free trial to the Research Center is for swing traders and investors. If you're one of those, join the Research Center. If you're a day trader, join the Intraday Stock Chat. Both have 7-day free trials. We look forward to having you soon. Take care.